Hey everyone, welcome back for a weekend wisdom episode of the Remote Real Estate Investor. My name is Emil Shore and my co-hosts today are
Tom Schneider
and Michael Albom.
And today's topic we're going to be getting into is setting the right expectations for owning remote real estate. So we've talked about expectations and cash flow, specifically for the financials and cash flow side. But now we want to talk about a little bit more about the ownership side of things and things you should expect as an owner, especially in the beginning. All right, let's get into this one. All right, guys. So this is something we were just chatting about before we hit record, and I think it hits a nerve with all of us. And it's something you will particularly see with people who I think are new to real estate investing, and B, just haven't had the right exposure to the education or the expectations that can come with rental properties.
That was great alliteration, Emil. Expectations and education. Love it.
Thank you. I try. I hope it's stickier with alliteration, you know? So this is stuff we hear about through our community channels. Maybe somebody just purchased a property they've owned it for a couple months and an issue comes up, and it's often met with expectations of, I didn't expect it to be this much, or
I didn't expect it to happen to me, or I didn't know that this was an issue that even could arise. And so,
yeah, exactly.
We were talking about before we hit record here, Emil, you brought up such a good point. It's like, yeah, but it's a house. Like if you've ever lived in a house or lived anywhere, there have been issues. If you live there long enough, issues with the water heater, issues with the paint, issues with the mechanicals of the property. So just because you're now an owner as opposed to a renter or a tenant, or even an owner in your own primary, these things happen. They're mechanical systems, just like you take your car to the maintenance shop to get fixed and worked on. Same thing happens with any piece of rental real estate, because that's how the world works.
Right. And I think, especially when you've only been renting and, you call up the management company or the owner and they come and fix things, you don't see the bill. So you're not really exposed to the costs for these things. You just call it in when something breaks. So that could be one thing. I think it's especially hard when you just buy a property and something happens, right? It's your first property and something breaks and you get hit with a $500 bill or a $1,000 bill, and you're like, oh man, there goes my cash flow for the first couple months. And maybe you kind of just like think, well, is this going to happen forever? Is this, do I have really bad luck? Did I buy a lemon? Whatever it is. But I think the message we want to tell people is, that's common. This is part of owning real estate. There's going to be expenses. We call it a lumpy business. You'll have times where nothing happens, and then other times where it seems like everything is happening all at once.
The sky is falling.
It can be painful. Yeah. So, has that been your experience as well, guys?
Yeah, and I'd say a term that I've used a couple times is peanut butter spread, like the risk, and to unpack that peanut butter spread, the risk is like over enough volume and over enough period of time and volume of units, things tend to average out, but it's not unreasonable for, and it can seem extremely frustrating where, you buy a properties and maybe pretty early on, like some things come up. Over time, that peanut butter spread analogy is the lumpiness evens out over time. So, we had this conversation of this idea for Weekend Wisdom came up, and just looking at like YouTube, looking at like comments on forums and all kinds of stuff, and people get frustrated. But an important like kind of perspective to have in mind is, things come up as an investor, but over time things tend to even out. I with myself, have roughly like, a dozen properties or so. And it's like, some of them have never had anything happen, has just performed like a champ. And there's other ones where it's not, seriously, no, totally. And then some of them, it's like, I'll have a run where a year where it's like, oh man, there's a leak in the bathtub or something that didn't get seen. And then, the subflooring, and real estate is not a get rich quick game. Like it is a very much a long-term wealth building game. So, to kind of lose it, with one kind of thing coming up early on in your career, it can make you want to like point fingers or, I got tricked, blah, blah, blah. But with real estate investing, it's like, it's a little bit of, the dice is stacked in the investor's favor just because there's so many wealth building levers in it. But, with any type of investment, there's a little bit of risk that comes into it. But going back to my original point is that peanut butter spread year over year and getting, enough units that you do the process right and evaluating it, that risk is going to be peanut butter spread across over time. Long rant, long.
No, that's so good. And just to kind of piggyback off that, Tom, one is not a sample size.
Yeah.
Right. Nobody goes and buys one stock and says, oh, it lost value, or it went to zero. The stock market sucks. I shouldn't invest. Like one, it's just not a reasonable sample size. So to your point, exactly, given a long enough or big enough volume and a long enough time horizon, that's when you can start to really build out a reasonable sample size and come to a determination. And like my first property was about as turnkey as you could get. It was in a what would be a 5-star neighborhood. And the first month I got hit with a $1,500 tree cutting bill because there was a big storm and we had to cut these palm trees down. That was not in my pro forma. Now I know if I'm buying houses that have palm trees, account for cutting down trees or trimming the trees every couple of years. That's an expense that I'll incur. I didn't point my finger at my agent. I couldn't point my finger at anybody other than myself and go, oh, well, I should have asked that question, but I didn't know enough to ask that question. So I think, again, education is so key, and talking to other people about, okay, what do I really need to be aware of? What do I need to look out for is so hypercritical, because if you've never ran before, you're probably going to trip. And so I think it's really, really important to have those open and honest conversations with other fellow investors and learn about what truly goes into owning and operating rental real estate, especially remotely, because that adds a whole nother layer of complication.
That's right.
Great points. And, you guys already touched on it a bunch, and it's easy for us to say this after years of investing, right? Like, oh, don't worry about the expenses that come up on your like first property, second property. Take it from us. We had the headaches too. When these things happened, we got really frustrated. It's impossible to just not get frustrated when these things come up, especially when you have one property, right? But as things grow, as your portfolio grows, it won't feel as bad because you have multiple properties. So one bad thing happens to one, the other 3 or 4, or however many you have, they're doing okay that month. So it doesn't feel like as big of a hit. Whereas when you just have this one thing you're focused on, it just feels like, it feels much bigger than it is. The other thing, one quick mindset shift that I've tried to have is, in the beginning, I'd look at any repairs and be like, damn it, cost, this sucks. There's one silver lining I like to look at now. Let's say you have a furnace that just breaks. I'm using this as an example from myself. We had a furnace that just went out in the middle of a storm, and that's a $2,000, $2,500 bill. And obviously that sucks, but one way I try to think about it is, okay, cool. Now I don't have to worry about a furnace for another 10 to 15 years, right? So it's like the silver lining is now you don't have to potentially replace that thing for a while. So
I would just say, kind of a counterpoint to that, Emil, to your prior point about getting frustrated and it's impossible not to get frustrated. I think that if you truly go into this eyes wide open and have realistic expectations for the performance of that property and a reasonable reserve, I think that you could not be frustrated by some of those nuisance expenses that pop up. I think setting people up, I think letting people, how do I want to say this? I think not setting the expectation on the front end, or not having folks set the expectation for themselves on the front end, sets them up for failure, in that they do get frustrated with those expenses that they pop up. So again, I think they should be going into this eyes wide open, knowing kind of what the worst case scenario could look like, and be prepared for that. Because if you can't stomach the worst case scenario, you might not have any business as an investor, right? And as tough as that is to say, we don't want people going in feeling frustrated or tricked or deceived or anything like that. They need to understand this is a business and it needs to be treated and run as such. And sometimes businesses fail.
Yeah. And the last point that I'll make on this topic is, we're not saying, throw a dart randomly at an investment property, go buy it, and don't be mad when something goes wrong. It's, right. Have a process for your acquisition in understanding the property condition, kind of the occupancy situation, all of those details come in. And just like Michael said, be eyes wide open. And when something happens that maybe like wasn't to plan, like that stuff happens sometimes as a real estate investor, still have a solid acquisition process but have the foresight, the long view, kind of in knowing that this kind of stuff comes up, and it's part of being a real estate investor in general is managing these kind of costs that come up. And yeah, I think I got it in there. I think I got it in my point I was trying to say.
It's totally in there.
Yeah. Okay. Good.
It's good points, guys. Okay. Any final thoughts here, or have we nailed this one? Gotten everything we wanted to say out?
Like I say, the last thing is like, don't put in money that you like can't absolutely can't afford to lose. So like if the like whatever worst case scenario, don't have next month's whatever food to feed your family, putting into buying a rental house. So that'll be my last point. So yes, done.
And that's a good point for just reserves, right? Like that, don't sink everything you have in this. Like you got to maintain reserves for this exact moment, right? Things go bad. That's why we say maintain reserves. So if you have reserves, you're expecting these things to happen. So yeah. Michael, anything else?
No, I would just say to echo Tom's point, if you're going to go put $1,000 in the stock market, that should not be $1,000 you need to grow for next month's something, your rent, like you mentioned, Tom, or food budget, whatever. Same thing with real estate. Don't make this investment with it teetering on the fact that it has to work out exactly as you planned in the immediate short-term future. Long-term, absolutely, we can count on that. But again, short-term, no, that's not how real estate works. So maybe another thing to keep in mind before we let folks go is with regard to inspections. And I think that there's this really big misconception out there around inspections, and that if I go get an inspection report done, the inspector is going to highlight and find everything that's wrong with the house, and I can go get a budget and bid to repair those things, and there's not going to be a penny more over that. Well, that's not always the case. There's a couple things to keep in mind. One is inspectors are human, and humans make mistakes. So while they are professionally trained and licensed to be inspectors, sometimes things get missed. They shouldn't be missing the big things, but sometimes things get missed. The second thing to keep in mind is that these inspectors are looking at safety issues. And so the best example I can think of is I've heard people complain is, I got my inspection back. There was $2,000 worth of needed repairs. And then the property manager came in and said, there's additional $3,000 for paint because we got to repaint this whole house because the rooms are green, pink, and yellow. Well, an inspector is not looking at the paint color of that property because that's not a safety issue. That's a property management type issue that with regard to habitability. So a tip that I always like to give folks that I speak with is, hey, have your property manager go walk with the inspector on the day the inspector is doing their inspection, if that's an option. If it's not, send the property inspection report to your property manager and get their 2 cents on it. They're going to be catching those things like those off-colored walls or things that need to be repaired before you can get a tenant in place. And now you have a collective picture of, okay, here's the safety issues, here's the habitability issues. Let's marry the two and go get a bid to have that work done. That's going to be likely my make rent ready cost. Soapbox dismount.
Great one, because that is one that comes up so often is, well, this wasn't in the inspection report. Why is it coming up? So I think you nailed it. Those are fantastic tips. Cool. All right, guys, let's end it here. Thanks everyone for tuning in. We will catch you all on the next episode. Happy investing.
Happy investing.